Now, here is Ticky Fullerton on Your Money.
Hello there, happy Friday. I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation, internationally, especially where business and politics meet as they do every week. Now, just what is stealing? One man who's been there says NAB CEO Andrew Thorburn and Chair Ken Henry have to have the book thrown at them for the fees for no service scandal. Former white-collar criminal Daniel Saunders from Melbourne coming up. An international perspective on the Hayne final report. Nigel Lake, Executive Chair of Pottinger, coming up shortly. And NAB shares down over 1% at the close after the CEO and the Chair resigned. CLSA's Brian Johnson gives us his view on NAB for the future. Well, you know, with two huge scalps from NAB this week to satiate the calls for big bankers to go to jail following the tsunami of bank failures, just what is stealing? We thought we'd ask. A young man walks into a local ATM in Victoria late one night, tries to take out some cash. Money comes out, but he sees that it's not deducted from his account. Next night he goes back and the same thing happens. Well, he realises that while the ATM is under maintenance, he can take whatever he likes. Well, hundreds of thousands of dollars later, and having lived the life of Riley, he comes to his senses, realises that if it gets any bigger, then he'll have to become some sort of international fugitive and not see his mum ever again. He fesses up. He goes to jail for 12 months. Well, that's just what happened 3 years ago to Daniel Saunders with NAB. Earlier this week, after hearing NAB CEO Andrew Thorburn's media interviews, he contacted me. Was there really much difference, he asked, after the appalling fee for no service scandal at the bank and comments from Kenneth Hayne that Chair Ken Henry and Andrew Thorburn between what they did and the theft of money, in his words, from NAB customers. My guess is there are a few ordinary folk out there who might be thinking the same thing. Well, for years there's been criticism of regulators that they're quick to toast the little guys in white-collar crime, but with the big end of town, it's been compromise over coffee. Well, shortly we'll hear from Dan Saunders himself. But bankers involved in raking in fees without doing a thing, of course, say that may be negligent, but it's not stealing, as no one knew. On the other hand, you could look at the time taken for banks, once they become aware of problems like this, to fix the problem, and then also the time taken to give the money back. Well, ASIC says it's been an average of 226 days from the end of a financial institution's investigation into the breach, the end of that, and the first payment to impacted customers. 226 days. Now, is that stealing in the all-important eyes of the public? Compromises over coffee are over. Well, this week, ASIC banned CBA's financial planning business from charging any fees for service because they still hadn't made good on the enforceable undertaking agreed with the regulator, something the bank CEO Matt Comyn admitted to me this week was inexplicably bad behaviour. Kenneth Hayne gave both the NAB chair and the CEO a dressing down without coffee on the now famed page 411 of his report, in a way that Ken Henry described as a deeper reason than any other for resigning, including his time on the stand. He said the gap between what NAB says it does and what it aspires to deliver. OK, well, let's kick off with the week, because it was such a massive week. The Royal Commission's final report coming out on Monday, eventually leading to Commissioner Kenneth Hayne claiming his first two scalps. Joining me here to unpack it all, Your Money's chief business reporter, Leo Shanahan. The week that was.
I was talking to a colleague earlier and I just had to be reminded whether the Royal Commission was this week, the release of the Royal Commission report was this week or last week, because it does seem like an eternity. It's been such a big week. But look, I think it is worth reflecting on the week as a whole, because it does give a good sense of an arc as to how the Royal Commission report has affected the sector culminating yesterday in the resignation, of course, of Thorburn and Henry. I mean, we had Monday, of course, I got locked up in Canberra, and there was this real kind of sense of trepidation in the industry about what it would contain. We got out, rushed out at our shows on Monday and Tuesday night, and
ASIC hit CBA that day.
ASIC hit CBA that day, so we thought, hang on, this could be big because they're getting ahead of perhaps further action by the Royal Commission. And then there was a bit of a sense of flatness around the report itself, that it didn't, go far enough in certain areas. Mortgage brokers certainly copped it, but well, I'd seen that coming. I said that in preview, and a lot of other people had as well. So it wasn't that surprising, and except for, I think, and there wasn't those individual criminal recommendations either, or even civil ones that perhaps we were expecting, even though there has been 20 odd referrals. But there was that infamous now page 411 that singled out Ken Henry and Andrew Thorburn, and I thought that was really interesting in the sense that the damage that has done, it's really about more the theatre of the Royal Commission, and I don't mean that in the sense that it's that I don't mean to underplay that, but that the sense of the evidence that was given actually had the greatest impact in a way in the Royal Commission
around
than the reporter itself, around fee for no service and the damage it's done to people. So look, and then Tuesday, of course, Andrew Thorburn spoke to you, and let's have a look at what he said to you that day. He was pretty keen to hold on to his job.
Why on earth did you decide to take extended leave?
Well, Ticky, I think the bigger picture here is our bank has a clear strategy. We have a very competent management team. We've laid out to the market what we're doing, and we're implementing that. I and all our leaders and leaders in corporate Australia, it's demanding. You need energy, you need a break, you have a life outside the company. I mean, I've got a marriage, I've got children, I've got elderly parents. They're the people who I want to spend some time with, and I don't think it's unreasonable that, particularly as I've been in the bank 14 years and you build up long service leave, that I do take that. I think that is important for mental and physical health, and to lead in a sustainable long way. And I want a role model to people inside the company that that's okay to do.
Andrew Thorburn there was, well, he was pretty defiant. You thought he was going to hold on to his job. And it was in that political sense, I think, that if he could hold on for the rest of the week. You see with politicians, they'll keep their job. As it turned out, then Wednesday we had, of course, Matt Common delivering CBA results. He did a good job, I think, in an interview with you as well. And the results were good. I think he normalised the discussion around banking, which was kind of needed to get back to results.
Brian Hartzer did in his commentary around the property market as well. So those two, it's been quite interesting how they played it.
And I thought that could have helped Andrew Thorburn. But of course, Thursday, we had another story about Rosemary Rogers, a story that I've been covering as well.
Andrew Thorburn,
the EA, the former Chief of Staff, and the criminal investigation to do with that, and a holiday that she's gone on, and what kind of benefit perhaps he's gained. We're not suggesting any wrongdoing on his behalf, but then of course it all got too much, and then yesterday afternoon the announcement that both of them would be going. That being said, Ken Henry is still holding on to some degree, and it's not clear when he's going. But let's have a look at what Andrew Thorburn said last night when he was resigning.
In speaking with Ken, there's been a desire that there should be some change. I understand that. I was up for the ongoing commitment. I made that very clear, but I recognised the board's desire for change, and I offered to step down to help that process. The board accepted that, and I just want to be clear that I accept that. I don't have business about it. Today mainly I've been sad, but I don't have bitterness. I accept that the board has the right to make that decision, and they make it in the best interest of the company.
And of course, we've got the regulators to come now, and
all those referrals.
So we're waiting on those referrals. But look, the political argument, that's not going anywhere. Bill Shorten today really foot on the throat stuff. There was no, best of luck to Mr. Thorburn. It was if nobody goes to jail, if nobody gets convicted, Australians will think there has been a cover-up. That's what Bill Shorten said today, and so that indicates in this election year this is an issue that they are going to be red hot on. So it's not going anywhere at the end of the Hayne Royal Commission.
Who'd be a banker today? Leah Shanahan, thank you. Now, after my interview with Andrew Thorburn on Tuesday, I received an interesting email. It read, "My name is Daniel Saunders. I'm a common man who went to jail in 2015 over a banking glitch." Goes on to comment about a line Commissioner Kenneth Hayne asked of Mr Thorburn last year during the Royal Commission hearings. Kenneth Hayne says, "So this money fell into the pocket of NAB accidentally." Thorбurn's response, "I can't disagree with that. It wasn't intended to be ours, but it became ours." So it begs the question, is charging fees for no service like NAB, and indeed like other banks have done, is that the same as stealing? Well, Daniel Saunders believes it is. It's very close. I spoke with him earlier today. Dan Saunders, take me back to the start. How did you find yourself in front of this ATM in this position, and what happened?
Well, it was just dumb luck, really. I mean, I just happened to be at the ATM, and I needed some money for a round of beers, and I thought, oh, well, it can't give me a balance, or it won't give me a balance, so I'll try and transfer some money between my accounts, and yeah, worked out this crazy loophole from there. Right,
because I think you were way up on your credit card anyway at the time. Reports later, winding forward, was that maybe 1.6 million you got to. You owed the bank NAB 250,000. Have you any idea what sort of numbers we were playing with here?
Those are ballpark figures, but again, there's statements that have been, deleted and things like that. So, I sent the screenshots of the internet banking and things like that to you. So, yeah, who knows really? I mean, it definitely got right up there, yes.
So, what did you get up to with all this dough?
Well, I think that's pretty well documented. If you can Google it if you really want to know, but I mean, I've never focused on the sort of, people get sensational with it and say, oh, you did this or you did that, and that's all fine, but I think no one's really focused on the actual seriousness of the whole thing. I know what I did. I got a loophole. I exploited it, and
But do you consider it stealing?
Yeah.
Do you consider what you did stealing?
Well, I didn't initially, but definitely as over time it kept building up, I started to, yes, and that's why I eventually stopped, because I started to think of it as stealing. Absolutely, yeah.
So you, just to be clear, you voluntarily stopped because I think your credit card got eaten at about 40 grand, as I understand it, but you could have gone on with your accounts, shifting accounts, and gone off internationally abroad.
I think you've seen that the problem with these banks is that the departments aren't talking to each other. Level 1's not talking to level 4, and 2 and 3 will get upset if they try and go above them. So it's sort of different departments. There was a savings account, there was a credit card account. So different departments, departments knew what was going on, but they sort of didn't link it all together, I think.
Right, and so you kind of sort of talked to NAB about it, and then it took, what, a long time before the police eventually arrived?
It took a matter of years.
Before the police...
it took a long time to get... yeah, definitely. I mean, I'm just one individual, so they could have, come and crushed me at any point, really. So, I mean, it was in my best interest, I thought, to sort of nip it in the bud. I didn't realise it would take so long, and even if I had have walked away and said, "Oh, forget about that, that doesn't matter," which a lawyer did actually tell me to do, they still could have knocked on the door at any point. So that for me wasn't enough. So I wanted to sort of take it back into control, so to speak. So yeah, that's why and I didn't go full bore with the whole media process straight away. There was a small off-camera sort of interview with the Current Affair.
But you were pushing with the media to try and encourage some closure.
Yeah, but very, very slowly at the start, and then it all basically culminated in a Current Affair interview, and sort of they acted like it was the first time I told them about it, and sort of set up my arrest. It was all very dramatic, but
sure
yeah,
it was.
I did play along. But at the end of the day, I mean, I'm not in charge of their show or what they want to do. So I wanted to get my story solved, and yes, I posed for the cameras in a way. But I mean, everything I said happened, and that's the story.
So you then went to jail for what, 18 months? What was it like? What sort of experience did you have?
Yeah. Yeah, I went to jail for 12 months,
12.
And then had a suspended sentence for another year and a half. Yeah, it was probably, in a word, it was hectic. I reckon that's the best word for it.
Right. Okay. So you were
slow. Sorry to interrupt you. Slow. You know, sort of very, very bored moments, culminating in very, very crazy moments. I guess. You know, so there's long stretches of boredom where nothing happens.
Yeah.
And then a big, you know, sort of surge in activity straight away.
But you're a white collar criminal. Did you have any moments when you were worried about your own safety?
Well, that's the thing. I'm a white-collar criminal. I had to go to, you know, maximum security prison for 3 months. So, you know, I certainly got, you know, certainly got a different view of the world, and saw how, you know, sort of, you know, people, you know, are educated, or, you know, lack of education, and the paths they take and all that sort of thing. It was eye-opening to me. I mean, now I can look back because I didn't put, you know, get put in the cell with the wrong person. So I'm here to tell the tale, and I can sort of reflect back and say, wow, that was really, really interesting to be a part of that and actually see it with my own eyes.
Okay, so look, it's an extraordinary story. You're actually here because you emailed me straight after my interview with Andrew Thorburn, Chief Executive of NAB, and before Andrew Thorburn and Chairman Ken Henry resigned. You don't see much difference between their behaviour, running a bank which are charging fees for no service, and what you did. Why? Yeah,
absolutely, yeah. Well, I think, you know, for a start, I mean, phrases like, you know, the money ended up in their laps, and, you know, yes, we got money and we didn't think we, you know, should have got it, and, you know, and we did so for, you know, up to 10 years at a time. I mean, aren't they in a position where they, you know, actually hold the power over, you know, people? I mean, your money goes into a bank and my money goes into a bank, you know, if you get paid from whatever else, so then they can draw on that money whenever they'd like. So they've probably got a bit more of a responsibility to be able to, you know, sort of oversee that. I'm just one person. They've got, you know, 33,000 behind them or something like that. So I absolutely did the wrong thing, 100%. Yeah. But when I read the report, Mr. Haynes' report, I thought to myself, hang on a second, there's bits of this. I'm not saying it's the same thing, Ticky. I'm saying that it's strikingly similar.
Right, because I mean, they, I'm sure, would say, well, you knew you were pinching money via a loophole. You knew you were pinching money via a loophole. Now, they, on the other hand, say they didn't know. Maybe they should have known. Maybe it was negligence, but they just didn't know that this was going on.
I think I heard on radio the other day that Mr. Thorburn said something along the lines of, you know, they were overcharging dead people for 10 years, but they didn't intend to, so that made it okay. And one person midway through last year picked it up. One person out of 33,000 went, oh, hang on a second, we've been doing this for 10 years. You know, you can spin it however you want. I admit to my crime and I say, look, this is what I did. You know, put me in jail. I thought they might put me in jail for 5 years. You know, there was a bloke in China that just got put in for 10. You know,
yeah, I saw that.
So it's you know, it's talking about owning your you know, owning your mistakes, and you know, sort of to say, you know, like, oh, you know, we made some mistakes. You know, you have to take ownership of them, and that's what I've done.
Now,
and
do you
that's
think,
what you'd like to see?
Do you think Ken Henry and Andrew Thorburn falling on their swords as they have done this week? They've both held very prestigious jobs. One would imagine they're certainly Andrew Thorburn's unlikely to hold that sort of level of job again. Is that enough, or do you think there should be other charges, including criminal charges, pressed?
Well, I mean, that's not for me to decide. I'm not going to get into it. You know, basically, they've lost their jobs. Okay, you know, they've lost their jobs. They can go to the country for a while. You know, have a think about it. They'll get a payout. You know, I lose my job. You know, or my casual job. I lose my casual job, and I've got to go to seek.com.au straight away.
And you've got a record.
So I don't have much sympathy. When I go for a job, someone can look up Google and they can say, oh, look, yeah, this guy, Do we want this guy as a part of, you know, which is all fair enough. I copped that on the chin because that's what I did. But yeah, this hiding behind the big army of people is just, you know, it's just a slap in the face.
So I must ask you another one. What would you say if I told you that ASIC, the regulator, had found on average that the big banks have taken 226 days from the time they actually found and investigated the breaches to the time that the first customer gets remediated, gets their money back? Yeah.
It's the equivalent of, you know, someone like Qantas. You know, you book a flight and they take your card details. It's the equivalent of them keeping the card details and then charging you for a flight to Newcastle, and then you ringing them up and saying, hang on a sec, I didn't want to go to Newcastle, and them turning around and saying, oh, well, that's okay, we'll refund you the money, but it's going to take a while. You know, so you have to put your life on hold. If that money was, you know, needed by you or your loved ones, you have to put your life on hold essentially until they sort out the mess. I mean, it's really not good enough, really. I mean, you know, nothing. They talk about changing culture of banks. Nothing would change the culture of a bank like one of their board members in jail. It'd change very, very quickly. I guarantee you.
All right. What are you doing now, Dan?
Oh, now I do some caring during the day, and then I've got a casual job at night.
Yeah, happy with that?
Yeah. Oh, look, it's fine. I mean, there's times when you go, oh, should have gone to Spain, should have gone to Mallorca. But yeah, no, on the whole, fine. I think, yeah.
Well, Dan Saunders, thank you for coming in. It's a fascinating story you have. Thanks very much for your views.
No, it's a pleasure. Thanks for putting it. You know, it's refreshing that you sort of take a different. You know, people in the media, especially, they're not willing to take things at different angles like this. So it's refreshing. It's good to see.
All right, all the best.
Thank you.
Interesting fellow. After the break, a global view on the Hayne Royal Commission. Nigel Lake, Executive Chair of Pottinger, joins me next.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Royal Commission has made headlines around the world. Wall Street and the Square Mile in London all marvelling at the spectacular fallout this week, with Ken Henry, Andrew Thorburn announcing their resignations at NAB with lengthy explanation. Well, US-based Nigel Lake, chairman of Pottinger, one of our regulars on the show, he's in town. He's an advisor to many in businesses here and in the US. He joins me at the desk. Nigel, you normally come down this time of year, why, for results? Or?
Absolutely. It's more the start of the new year, so everybody's finished their holidays, they're back at work, they're beginning to think.
We start late in Australia.
It's not so much the results, but OK, what's going to happen next? So a lot of activity kicks off now.
And then, of course, you've had this past week.
Well, I expected it to be reasonably lively, but there's been obviously the drama of what's appeared or not appeared in the Royal Commission report, changes at NAB. It's the beginning of a much longer story. It's not the end.
All right, well, let's talk about the longer story in a minute. Any particular issues you had or comments you'd like to make about the report itself?
I think the interesting thing is an awful lot has been pinned on brokers, as if there were these broking businesses which were somehow the heart of the problem.
Well, that was a central recommendation for change, wasn't it?
Absolutely, and they judged through the eyes of the report. It's perfectly reasonable to look at that, so I have no query with how that's been looked at by itself, but there's still the bigger question, which is who owned the brokers, who drove the behaviour of the brokers, which of course is mostly the big four banks. And the independent brokers have provided the only real point of competition in residential mortgage lending going back 20 years. So their future is hugely important to the ordinary consumer if you want to be able to have a choice.
So if these recommendations went through, if Labour gets in May, and if we end up with borrowers having to pay up front to choose their loan, right, which is the sort of recommendation that the government is stalling on, how do you think that would impact the broking community, the mortgage?
So I'm very cautious about that, because if the consumer has to pay in cash up front, will they be prepared to pay for that or not? It's a big question. It's very much in the interest of the banks for there not to be mortgage brokers, because the mortgage brokers have driven the competition. The thing that whichever colour of government comes back needs to address is how do we ensure that there is good competition in banking and not a comfortable oligopoly that just runs with prices that are good for them and not so good for the consumer.
You say all this is a prologue. Where to next? What happens next, do you think?
Yes, so I think the most important thing for any of the banks is to accept that they really have to drive fundamental change. There's been quite a sense this week that perhaps the problems are a bit behind them. They've sold the broking businesses, they've exited some of the financial planning businesses, and they can kind of get back to business. But if they get back to the same kind of business they've been doing before, I think consumers' eyes are much more open now to what has been going on. And one response to the Royal Commission this week is, boy, this is a fabulous opportunity. If you want to disrupt the way that this industry works, now is a great time to start.
Really? So,
absolutely.
And that's very much your space, the
so
financial
there are those organisations, whether you're coming at this with the open banking lens, so legislation.
Well, that's happening this year, isn't it?
Yes, not quite as fast as some would like, and you know, the banks are not necessarily trying to drive that too quickly. But that opens up a raft of competition. That's already happening.
But
in the
as far
US
as the
Europe.
people, because you're in the space a lot, as far as all the sort of potential disruptors are concerned, the talk around town amongst them about Hayne and the Hayne report is this is the land of opportunity.
They're absolutely right. Yes, this is a chance where you've had a lot of attention shown on the sector. Consumers' eyes have been, and maybe consumers are a little bit less complacent, because to some degree people have been complacent. There's not been lots of complaining about this until quite recently.
Do you think that could help the change in behaviour, the change in culture, literally a shift to disruptors? Because we hear constantly how sticky customers are to the Big Four, and whether there really will be change with open banking.
I think it's really important because it allows people coming from the outside to use the same information that the banks have got to use to understand which customers you might be able to provide a product to more competitively than they're currently providing it. Right? There's an awful lot of work to be done to make that work, because it's easy to say this stuff in theory. Doing it in practice is much harder.
Yes.
But I think it's a really important catalyst for change.
Briefly, markets around the world, how do you see it going forward?
So we're just about to put out a piece which I've called Preparing for the Hurricane.
Ooh, doesn't sound good.
Well, it isn't good short term, and that is there is an enormous amount of uncertainty driving many companies around the world. There's lots of different technological change going on, Internet of Things and the march of AI and wholesale change in the energy value chain, etc., etc. Geopolitical tensions all around the place, trade wars, internal conflict. You've got the UK with Brexit, the US with Trump. Various other countries suffering. France, the whole Macron experiment is going through a very difficult period. All of that looks like a time of great uncertainty and significant risk. Of course, that translates into often the best time to go and do things. Asset prices get lower, your competitors get slowed down. So if you are ready, then there is great opportunity in that. And Australia went through this in the financial crisis. We did really well here. Almost no one acted on that in terms of investing offshore. We stayed home and we stayed scared. We need to be ready this time, because the next time this happens is a wonderful opportunity.
Yes, which might not be quite yet, but
could be, yes, but it's coming soon, and it's already there. The UK and Brexit is a total disaster.
Yeah. All right. Look, I love your optimism on our opportunity. Thank you very much for joining us.
A real pleasure, Ticky. Thank you.
Well, after the break, we'll digest today's big market moves with my Friday panellists, Michael McCarthy from CMC Markets, Martin Lakos from Macquarie Wealth Management.
This is Ticky on Your Money, covering the big business stories.
Yes, welcome back. Now, let's go to markets. REA is saying no improvement in its market conditions, which are expected to weigh on revenue growth in the second half. This as it reports a 98% dive in first half net profit after a $173 million goodwill write-down against its Asian business, together with fewer housing listings. Well, on those results and the other big market moves this week, I'm joined by my market panellists, Michael McCarthy from CMC Markets, Martin Lakos from Macquarie Wealth Management. Gentlemen, hello.
Hello. Thank you.
Now, perhaps I go to Michael first, just on REA. I mean, interestingly, Tracy Fellows now moved onwards and upwards to greater things. but there was always this Asian issue, wasn't there?
Absolutely. And of course they've taken the opportunity to take the write-downs around it, and that's why we saw a 98% fall in headline profit. But, and I must say, management I think did exactly the right thing. They're very cautious about the near-term outlook. They told us that listings were down 11% in January. We also heard that they're very cautious about political impacts, potential from the New South Wales state election and the federal election, of course. So they gave a warning about potential hits to housing market activity. But underlying all that, in the first half, they saw a 20% increase in underlying profit. Now, for mine, that's a stonking result, particularly in the Australian market, particularly in a more mature
given what the
business.
market's doing at the moment.
Exactly. So I'm a lot less concerned about REA's future than that 4% fall we saw today would indicate. I suspect the market's got that one wrong.
All right, all right. Now look, Martin, we've got to cover the week of Hayne.
Indeed.
And what it did, particularly, of course, NAB and those two very senior leaders falling on their swords yesterday.
Yeah, indeed. And to some extent, you know, when you see that the decision by both the chairman and the CEO, clearly the commentary has been around that they were appropriate moves. It's probably more important to be thinking about what does this actually mean for NAB going forward. Now, Phil Cronican, who's a highly regarded banker, has stepped in the role as
acting CEO.
Acting CEO. Yeah. So with a company that's in the middle of a transformation process, you know, they've got to make sure that that continues along the way. And hopefully we won't see any speed bumps in regards to that process. I think Phil will probably do a pretty good job. But again, there's uncertainty now until we see the resolution on the new chairman of the board, resolution on the new CEO. It's been clearly commented that there's a number of candidates and who all appear to be pretty good, both internal and a few external, for the CEO role. Mike Baird is obviously the number one in the commentary perspective, but there's the CFO and there's the gentleman who came from New Zealand who could do quite well. External, Craig Drummond, who was the Chief Financial Officer, now running Medibank. He's got to be in the mix, I would think, if he puts his hand up. So they've actually got a choice domestically, and if they cast the net wider, clearly there's a potential of an international candidate.
Yeah. If international candidates are interested in this space. But Michael, how did you see NAB? Because of course it had its fourth quarter as well. From a market point of view, with shares were down, is that because of the results or because of the uncertainty and the change?
Well, nobody's going to take NAB's word for it at the moment, and that's the reality. And I think that the events of this week demonstrate that NAB has finally got that. They've understood that optics are important, particularly in the current environment, particularly with the federal election coming, particularly with the implementation of the Royal Commission coming. So I think what they're demonstrating here is due process. They put a temporary CEO in, smart idea. Demonstrate that they're going to do the hard yards, do the due diligence to find the right candidate. But I'm with Martin, I think they're going to land on Mike Baird. And the reason for that is they need somebody who can bring about cultural change, somebody who can manage large projects, bring about structural change, and somebody who's got a political ear. Well, Mike Baird, tick. So I think they're doing the right thing by going through the process.
Although maybe the other side of politics, if the Labor Party gets
another reason not to make a permanent appointment until after May.
Yes.
But there's news on the changes, Ticky. We did see the first quarter numbers were actually completely drowned out by that. Really, the market wasn't talking about that.
And they were all right.
They were good, not bad numbers. Cost out was probably slightly better than had been anticipated. Capital level was slightly lower than we would have liked to have seen, and they've got some more work to do, particularly around their DRP and building up their capital base towards 11.5%, 12%. But on the whole, the numbers are okay.
Exactly. And so, whereas I thought, Michael, that the CBA's results were perfectly pitched for this climate, wouldn't you say?
Ideal. I'd accuse them of having the skills of Chinese officials in the way they delivered exactly the result that they should have in the current environment. I'm with you, Ticky. 4.9 billion, just down a little. Concerns, conservative outlook. Ticks every box.
Yeah, quite interesting. Okay, look. Also, huge news this week, the slight change of view of the Governor of the Reserve Bank.
Well, a key factor in the huge rally we saw this week. But Mark and I were talking about this before we came on air. A 25 basis point adjustment, which we saw today in the Statement on Monetary Policy on growth and inflation, is a rounding error. So although they've said exactly what the market wanted to hear, and perhaps, and to be, in their corner, they're responding to weaker data. They didn't really change their view that much. But
if we're now with a governor who's 50-50, depending on scenarios, whether the next rate is up or down.
He acknowledged there was a scenario where they could go down. He didn't say 50-50 though. He said more balanced. So I know it's a nuance. I know it's a nuance.
Okay.
But you know that traders' lives are made and lost
but
the
But the language of central banks is all around nuances, isn't it?
Yeah, absolutely. Of course it is. Yeah. And there are special people who watch that.
And look to read between the lines. And of course, you see the redacted statements out of the Federal Reserve, for example, with the words changed or not. So
quick question. Yeah. Why is it that the market whooshed up when the suggestion was that there might be, in a scenario where rates go down? Surely that signifies a weaker economy. You know, surely the market should be looking at that.
Well, again, it's that nuance. So where you've had really the bias has been we're going to keep monetary policy accommodative, but we're looking probably for a rate rise. They've just moved to neutral now, so far more bias. And that was a surprise because it was only, I think in December, Mike, correct me if I'm wrong, the Reserve Bank actually upgraded its economic outlook forecast towards 3.5%.
Yes.
And the market was digesting that. 3 months later, the data suggesting maybe it's a bit softer. They're going to be very much focusing on
this. This is the new paradigm. Yep. Good news, bad news on every read now.
Yeah, and a week of nuance and bluntness. Yes, gentlemen, thank you very much.
Thank you.
Well, let's take a look at how NAB shares performed today, closing down around 0.7% in today's trade. Did this impact the other financials? Well, ANZ was up 0.1%, CBA up just under 1%, Westpac down around 0.3%, AMP down 1.2%. So what are the longer-term implications for NAB? Well, I spoke with top banking analyst at CLSA, Brian Johnson, a little earlier. Brian Johnson, I don't think you have slept probably for the last 4 days with the all the different results and the Hayne report. Now, on the evening that the report was released, your note to your subscribers was that both Andrew Thorburn and Ken Henry would probably go. You were right. Do you think that was the right decision?
Yeah, I think their positions were basically untenable. But I would flag to you, I think a lot of the media narrative. So there's a whole lot of reasons why they were both under pressure, operational underperformance. And I just want to really stress, I think they were both very gracious on the way they actually exited. But I would flag to you, I think that much of the narrative as to why the Royal Commission was so critical of NAB, it wasn't how they performed in the box. It's that the Royal Commission found some structural issues within NAB, and it really comes down in the fee-for-service debacle that NAB would appear to have been quite reticent in trying to basically remediate customers. That's what this was about. It's that they said we're trying to be good for customers, but when you actually looked at it, there was real resistance within NAB to actually complete the process, and in fact you'd say they were nearly trying to confuse the whole process during it. So I think
they didn't want to remediate customers.
When you read the document, it's very hard not to form that view. Now, I really want to stress that's some people within NAB, but at the end of the day, you're the CEO, the chair, you're the people that sit at the top, and as unfortunate as it is, someone's got to take responsibility for that. So I think that's what Justice Hayne was really saying. It's not about the performance in the box.
It's looking back at the time NAB was talking to ASIC about the fee for no service.
Correct. ASIC notified all the banks we're worried about fee for service. And then what happened at NAB, they kept on when you read it, it's quite alarming, but it was as though they kept on trying to deny there was a problem and really not remediate customers. It reads, and I really want to stress, that's what it reads to me like. That is the central issue.
Do you think that report was done after the time in the box that both Thorburn and Henry had?
I think I got a sneaking suspicion much of that report was written as the hearings were actually unfolding.
Yeah.
But a lot of the report goes into a lot of stuff that didn't actually come out in the public hearings, and that's the problem. It was a long process. People like me, we get really bored of watching it. We don't even watch it all. But there's a lot more that actually was going on behind the scenes that came out during their investigations, and it's there in the written paper trail, but perhaps it didn't necessarily come out in the public hearings.
Brian, NAB shares down today, 1.6 off when I last looked. Is putting Phil Cronican in there from the board as acting CEO, is that a good move from the market's point of view?
That's not just a good move, that's a great move. And And the reason is that I know Phil very well, but that's got not much to do with why I think this is a great move. Phil is basically, he understands banking, he understands compliance, he has run a customer-facing business, and just as much as anything, while NAB have got to work on improving some of these customer-facing things, Phil Cronican gets shareholder value. And that is what has been sadly lacking at NAB for a long time. Operation is underperformed. I know they're trying to fix that up. But under Phil Cronican, I feel much more confident that NAB can realise the latent capacity in the business. NAB has under-earned for a long time. It should be a truly great bank. And you can see that some of that will be unlocked under Phil Cronican.
A lot of speculation about Mike Baird coming up and perhaps replacing him as certainly the lead internal candidate to take on the CEO role. What do you think of that idea, and would Phil then look at the chair? Well,
I think Phil ultimately will become the chair, but it's a moot point. Like, Phil's 62, so he's really not that old, and he's a very good banker. So if he was to actually put his hand up to say, I'd like to be the CEO, that would also be a great outcome. But I would flag to you, one of the problems is that when we have internal successes for CEOs, because they're part of the previous strategy, the previous performance, it's very hard for them to actually look at the thing with fresh eyes. We talk about that a lot, but you can see it in NAB. A culture of internal succession means nothing has really changed. And in fact, when you have a look at it, NAB, the last time NAB was truly, truly great was under Don Argus. Ever since then, it has basically underperformed operationally, but then also it seems to me like every 18 months or so there's some disaster that you could have never anticipated. So it's about time shareholders had some really good management in there that will deliver shareholder value. You've got to be nice to customers to actually realise shareholder value, so it's a difficult tightrope to walk, but I think Phil can do that.
Brian, what are the chances that an international candidate would want to come and take the reins at NAB, given a likely Labor government, the sort of parameters that you're then working in, where there's a big focus on your pay, and indeed, you know, I'm just wondering whether this sort of market is the strategy, the NAB strategy is in place, signed off by the board. Would you really want to walk into a strategy that's halfway through?
Well, I think they've got to accelerate. Personally, I think they've got to accelerate some aspects of realising the shareholder value from that strategy. But that aside, the reality is that when you now come to Australia to work in a bank, it's going to be a lot harder going forward. You know, we're through the super cycle of housing credit growth. We've got the regulators really on your back. And really, the opportunity to get great variable remuneration probably goes down. Base pays have basically gone down as well in a relative sense. So
David Murray managed to get Francesca Di Ferrari from Credit Suisse, didn't he?
Yes, he did. Let's have a look at the strike price on all of his remuneration there. It's a lot north of where the current share price is as well, which is the danger in negotiating these deals. But I would flag to you, I think it'll be very difficult to actually get someone from overseas, but I could be wrong on that. But whoever it is, NAB shareholders deserve better.
Just as I say, shares are off today. Fourth quarter trading result came through as well last night. How do you see the bank from a shareholder point of view?
Well, it's interesting. When you have a look at NAB, we seem to have quarter after quarter after quarter where the result was 1.4. The result was 1.65. It's kind of been around 1.65 for ages. That said, that was a great result. And the reason why it was a great result is that NAB repriced up home loans in the end of January. The other guys repriced up in September.
Yes, Andrew Thorburn made a big deal of that.
So in the quarter, we had no impact of that housing repricing, and yet they delivered flat revenues, and that's a pretty good result. We also know they picked up a lot of market share during the period. Operating costs were down 3% in the quarter. That's very good. And even the loan loss charge, which was low, they took the opportunity to further boost some of their very conservative provisioning. So as that repricing flows through, I think it was a very high quality result. The market seems to be very worried about the sustainability of the dividend, but the capital looks all right. And what people often forget is NAB claw back a lot of the dividend through the dividend reinvestment plan. From a capital perspective, they're not there. And the better way to think of it is NAB are effectively returning their surplus capital through a high, fully franked dividend. I think I would prefer that to a silly share buyback. So on NAB, it's very easy to be a hater, but when I have a look at it, and over the very long term, it has been a continual value trap, but I just think it's too cheap at the moment. It's my favourite stock. You might recall last time I was here, I was telling you CommBank was my favourite stock. No more. NAB is now my favourite stock, and it's just that it is too cheap.
Brian Johnson, love your calls, love your insights. Thank you so much for coming in, and get some sleep.
Thank you very much.
After the break, we'll get an update on the gas market with Credit Suisse analyst Saul Kavonic.
Now, back to Ticky.
Welcome back. Well, let's go to gas from all this banking. The ACCC and Gas Market Reform Group in December identified information deficiencies in the East Coast gas market and recommend steps to improve transparency around gas. These recommendations include mandatory reporting and publishing on reserves, resources, drilling activities and LNG export prices, plus the raising of the maximum penalty for failing to report to $1 million. Credit Suisse says these recommendations raise the risk for export trading competitiveness and may import future supply and may lead to import future supply and M&A activity. For more on this and Credit Suisse's other insight into the gas market this quarter, pleased to welcome Saul Kavonic, analyst at Credit Suisse. Saul, it's great to have you back. We haven't talked for a while.
Indeed.
Now, this particular recommendation, all this new transparency, not good for the market.
Well, it's a mix. I mean, I think a lot of the transparency measures in there, which go across the value chain, didn't come as a surprise given the alluding to that we've seen in the numerous ACCC reports over the last 18 months. But there were a couple of measures in there which did surprise. The first one is actually requiring transparency on the prices that the LNG exporters are getting. And the ACCC report points to, for example, the United States has similar requirements and it doesn't seem to impact the market. I think something that might have been missed there is, unlike the United States, which is an infrastructure model linked to a liquid pricing hub, in Asia that's not the case.
But also they don't export relatively very much, do they, compared to what they're
slowly catching up to us.
Okay.
They're slowly catching up to us, but it's just a fundamental different business model. And for Australia's exports out of Queensland, publishing that pricing does put us at a trade advantage where we're seeing increased trading, increased portfolio plays, and if we're the only nation which is publishing this and others aren't, that can put you at a disadvantage in terms of what you can actually do in your marketing.
Right.
The other interesting thing which came out of the report is the measures to look at unifying and creating a reporting structure for reserves across the east coast of Australia. And that could do a couple of things. One is it could highlight some reserves risks at certain situations. We'd highlight in particular Santos's GLNG project, but also it could bring to light areas where gas is being warehoused, and that could then bring pressure to bear on companies which may be not developing resources, which could
when they should be, which is a good thing. You'd think.
There's a good
well, perhaps not for shareholders.
A good public policy case for it. And that means that it could put pressure to develop those or also to sell them to more motivated players, which could provide opportunities to the likes of Santos and Beach who are looking to acquire new acreage. Okay,
so this report recommendations, they have to be acted upon by the government of the day?
Yes, I mean, there's numerous measures there. Some can be done within the existing rules, but some is going to require some changes to the way.
So in a scenario this year, if we're looking at the big issues this year, obviously one is that we get a change of government with a rather different view on reserves, presumably.
Well, I think all these measures in here, what they are going to do is they're going to provide the ammunition to inform policy by a new government. Whichever government comes into power, we still think there's further reform measures that are going to go across the value chain in gas. And these transparency measures are going to help provide the ammunition to execute that reform.
So meanwhile, we've had all this overbuild with East Coast gas, LNG, export trains and everything. Now we've got an overbuild on the import terminals that are coming in. And you flagged this. It is ridiculous.
That is what is being planned. I'd say only in Australia's LNG industry does it get this crazy in a way. And we saw Kevin Gallagher, the CEO of Santos, actually come out and say that this is a problem. And he essentially suggested that LNG imports would, quote, be a gun at the head of manufacturing on the east coast of Australia.
Wow.
Now, it's interesting why Kevin's come out and said this, because many others in the gas producing sector on the east coast are quite okay with the imports. And I think what this is actually about is the politics right now in the New South Wales state government and in the opposition as we head into an election where, on a political lens, some governments may see an import terminal as political cover for not seeing reform on onshore gas drilling, which is where Santos's Narrabri has been stalled and stalled. And I think this is why we saw this coming out of Santos. They're worried that an import terminal will remove the government impetus to do changes to allow fracking, because we're heading into an election now. The Narrabri seat is actually becoming into contention, and we could see a terrible situation where both parties try and outdo themselves with an anti-gas message to try and push the numbers over on that seat.
Great.
And that's what Santos is trying to avoid.
All right, companies, what's going on with Woodside and their big Scarborough project?
So we saw two key developments essentially over New Year's and earlier in January, and they basically entered FEED on Scarborough and Train 2 at Pluto, where they intend to develop Scarborough. And this is typical Woodside bread and butter. They are steamrolling forward with this project at a remarkable pace.
Yes.
This is what Woodside do best, developing projects through this kind of very aggressive time frame. The other thing that was highlighted is Sherry Duhey, the CFO of Woodside, has has announced in the press that they're looking to sell down Scarborough. And the reason we think they're doing this is it's not just to sell down an equity stake, but it's actually to bring in an LNG buyer. So an LNG buyer will come in, take an equity stake, but a larger offtake position, and this de-risks the project. And in particular, we think they're going to be focusing on Chinese gas buyers, because Scarborough is dry gas. It's Chinese buyers have appetite to go into the upstream, and we can see the other more traditional buyers in Japan and Korea is going to have much more fierce levels of competition.
Yes.
And don't necessarily have the same long-term demand appetite as the Chinese do. So this is why we're seeing, I think, a shift in emphasis in Woodside's marketing to the Chinese market, and this could be a core de-risking event for that growth project in Woodside's portfolio over the next year. The key obstacle I think Woodside's going to face is less on the marketing front, but more on the joint venture alignment front, where they've still got to deal with BHP, Tokyo Gas and Kansai Electric in the base project and bring them on board with this story.
Okay.
I expect Woodside's trying to try and push them all through at a very rapid pace, but some of these guys take a bit more patient with their decision making, which is probably frustrating Peter Coleman's agenda there and his targeted time frame.
Well, the results coming up soon. Hopefully we'll be talking to Peter Coleman. Now look, Saul Kavonic, I've got 25 more questions for you, but we're out of time, so you've got to come back very soon. Thank you so much.
Thank you.
OK, look, that is all for the show tonight and for this extraordinary week. Next week, we're in the thick of the reporting season. On Monday, we'll have Bendigo and Adelaide Bank CEO Marnie Baker and JB Hi-Fi Chief Executive Richard Murray. Until then, thanks for your company.